That could extend its record losing streak to 9 straight weeks, dating right back to the inauguration. And that, plus protests at dealerships around the country, is even getting the White House's attention.
In recent months, the world's leading electric vehicle EV company, Tesla.
Tesla, the electric vehicle maker owned by Elon Musk, is warning the U.S. government that American exporters could be harmed.
Has experienced an unprecedented decline in its stock price. The company, once hailed as a visionary pioneer in the automotive and clean energy sectors, has seen its shares drop nearly 6% in a single morning session amid a broader sell-off in the market.
Shares of Tesla taking some losses this morning, down nearly 6% amid a broader sell-off here. CEO Elon Musk.
This decline marks Tesla's steepest fall since 2022 and has ignited a flurry of questions among investors, industry analysts, and enthusiasts alike. What exactly is driving this dramatic downturn? And what does it mean for the future of the company? This essay delves into the multiple dimensions of Tesla's recent decline. We will explore the various factors, ranging from internal challenges and external economic pressures to leadership controversies and intensifying competition that have contributed to the steep plunge in Tesla stock. By examining these elements, we hope to provide a comprehensive understanding of the current situation and offer insights into what might lie ahead for Tesla, its investors, and the broader EV market. The magnitude of the decline, a historical perspective. To appreciate the gravity of Tesla's recent performance, it is useful to look back at its journey over the past few years. Tesla's meteoric rise was driven by its breakthrough technology, aggressive growth strategies, and Elon Musk's charismatic vision for a sustainable future. During its rapid ascent, Tesla transformed from a niche automaker into a dominant player in the global automotive industry, pushing the boundaries of battery technology, autonomous driving, and renewable energy integration. However, recent data indicates a sharp correction. Over the past quarter, Tesla's share price has fallen by 36%, with an overall decline of about 45% from its peak of approximately $488.54. This dramatic erosion of market value has not only routed investor confidence, but has also raised serious questions about whether Tesla's current challenges are temporary setbacks or indicators of a more permanent structural problem. The pace and scale of this decline have caused investors to reconsider whether the era of relentless growth for Tesla has finally come to an end. Internal factors, leadership distractions, and strategic shifts. A significant factor frequently cited in discussions about Tesla's decline is a perceived distraction of its CEO, Elon Musk. Known for his unconventional approach and multifaceted business interests, Musk's attention has often been split among his various ventures. Critics argue that his focus on side projects, such as SpaceX, Neuralink, and even his controversial social media presence, has diverted much-needed attention from the day-to-day management and strategic execution at Tesla. Many investors have expressed concern that Musk's involvement in high-profile political statements and his ventures in the cryptocurrency space are taking him away from addressing core challenges within Tesla. The argument follows that the company's innovative edge and operational discipline may suffer if the visionary at the helm is seen as preoccupied with projects outside of Tesla's immediate sphere. Some observers claim that Musk's distraction is undermining Tesla's ability to navigate a more competitive and challenging market environment. Moreover, internal management issues have also come to the fore. Rumors have circulated that some activist shareholders and board members are growing impatient with the current state of affairs. Questions have been raised about whether Tesla's executive team and corporate governance structures are robust enough to support the company through these turbulent times. If internal conflicts or misalignments exist, they could exacerbate the external challenges Tesla is already facing. External economic pressures, global recession fears, and shifting demand. Tesla's stock performance cannot be viewed in isolation from a broader economic context. The global economy has been beset by multiple headwinds over the past couple of years, including high inflation, rising interest rates, and geopolitical tensions. These macroeconomic factors have contributed to a cautious sentiment among investors, who are increasingly wary of high-growth, high-valuation stocks. One of the primary concerns is that a potential global recession could reduce consumer spending, particularly in the luxury segment. Tesla's vehicles, which are priced at a premium relative to many traditional cars, may see diminished demand if economic uncertainty deepens. As disposable incomes shrink and borrowing costs rise, consumers might delay large-ticket purchases, affecting sales not only for Tesla, but for the entire automotive sector. At the same time, broader market volatility has led many investors to lock in profits, further intensifying the sell-off in stocks like Tesla. The rapid evaporation of hundreds of billions of dollars in market value has spurred a risk-off sentiment, with investors increasingly favoring more defensive stocks and assets. This shift in investor behavior is contributing to the downward pressure on Tesla's share price, even as the company continues to report strong production figures in some regions. Competitive pressures, a crowded EV market. When Tesla first revolutionized the automotive landscape, it operated in a relatively unchallenged market niche. Today, however, the situation is markedly different. The EV market has become increasingly crowded, with both established automakers and new entrants stepping up their game. Traditional giants such as General Motors, Ford, and Volkswagen have all launched competitive electric models, while aggressive Chinese companies like BYD and NIO have made rapid advances in technology and pricing strategies. This surge in competition is eroding Tesla's once dominant position. Where Tesla was previously seen as the sole quarterback of the electric vehicle revolution, it now faces challenges on multiple fronts. Aggressive pricing by competitors is putting pressure on Tesla's profit margins. The company's recent price cuts, while intended to boost sales volume and maintain market share, have also raised concerns about the sustainability of its margins and long-term profitability. Additionally, European automakers have intensified their efforts to capture a larger share of the global EV market, with governments around the world pushing for cleaner transportation solutions and offering substantial incentives for electric vehicles. The field is now teeming with alternatives. The fierce competition means that Tesla can no longer rely solely on its first-mover advantage or brand prestige to drive sales. Instead, the company must continually innovate and execute flawlessly, a challenge that becomes even steeper amid increasing competitive pressures. The role of price adjustments and profit margin concerns. One of the notable tactical moves by Tesla in recent months has been the implementation of significant price cuts on its vehicles. These adjustments are designed to stimulate demand and make Tesla's cars more accessible in an increasingly price-sensitive market. While lower prices can boost sales volumes, they also come at the risk of compressing profit margins, a critical metric for investors. In an environment where investors are already anxious about the company's growth prospects, reduced profit margins can exacerbate fears of a long-term decline. If Tesla's profit potential diminishes due to aggressive pricing strategies and mounting production costs, investor sentiment may shift further towards selling rather than holding or buying shares. This situation is particularly concerning in light of global inflationary pressures, which are driving up production costs and squeezing margins across the automotive industry. Furthermore, the aggressive pricing strategy may signal that Tesla is finding it challenging to sustain its market share in a rapidly evolving industry. With competitors offering a broader range of electric vehicles at competitive price points, the need to cut prices could be interpreted as a sign that Tesla's competitive moat is narrowing. This perception may drive even more cautious behavior among investors, leading to further declines in the stock price. Elon Musk's multifaceted persona, genius or distraction. At the center of much of the debate surrounding Tesla's performance is its iconic CEO, Elon Musk. Musk's public persona is as much a part of Tesla's brand as its cutting-edge technology and innovative products. His bold vision and willingness to take risks have been instrumental in propelling Tesla to its current status as a market leader. However, in recent months, his activities outside of Tesla's core business have come under intense scrutiny. Critics argue that Musk's forays into other ventures, ranging from his high-profile political comments to controversial engagements on social media and high-stakes investments in cryptocurrency, are detracting from his ability to focus on Tesla's operational challenges. When a company's leader is perceived as being spread too thin, it can shake investor confidence, leading to a decline in stock value. In Tesla's case, there is growing concern that Musk's involvement in non-automotive projects could be diverting critical resources and attention away from addressing core issues such as production efficiency, market expansion, and technological innovation. Yet, there is another side to this debate. Many supporters of Musk maintain that his unique vision is the cornerstone of Tesla's success. They argue that his ability to take bold risks and drive transformative change is precisely what sets Tesla apart from its competitors. According to this perspective, any temporary distractions are outweighed by the long-term benefits of having a leader who continuously challenges conventional thinking and pushes the boundaries of what is possible. For these investors, Musk's multifaceted interests are seen as a sign of his relentless pursuit of innovation, a quality that has consistently propelled Tesla to new heights, even after severe setbacks. Market sentiment and investor behavior. A tipping point? Investor psychology plays a crucial role in the dramatic fluctuations of Tesla's stock. The company's dramatic 36% quarterly loss, combined with a total 45% decline from its peak, has left many market participants questioning the long-term sustainability of its high valuation. Historically, investors have been drawn to Tesla's narrative of explosive growth and groundbreaking innovation. However, when the stock experiences a steep decline, the market's reaction can be swift and unforgiving. Many investors now face a critical dilemma: whether to sell and secure their profits or hold on and hope that Tesla will eventually rebound. In periods of market uncertainty, the tendency to lock in gains can accelerate a downward spiral as more and more shareholders decide to exit their positions. The resulting sell-off only deepens the decline, creating a feedback loop of negative sentiment. This behavior is particularly pronounced in a volatile stock like Tesla, where each percentage drop can trigger panic selling among short-term traders and institutional investors alike. The situation is further complicated by the broader market's risk-off sentiment, with global economic indicators pointing to potential recessionary pressures and increased market volatility. Many investors are shifting their portfolios toward more conservative and defensive assets. In such an environment, high-growth stocks, especially those with a volatile track record of Tesla, can become unappealing, further exacerbating the decline in share price. The competitive landscape. Tesla's position in a crowded market. Once regarded as the uncontested leader in the EV space, Tesla now operates in a market characterized by intense competition and rapid technological change. Traditional automotive manufacturers have not only embraced electric vehicles, but have also ramped up their investment in research and development to close the gap with Tesla's advanced technology. Meanwhile, Chinese manufacturers are employing aggressive pricing strategies and benefiting from robust domestic support, challenging Tesla's dominance on multiple fronts. The rapid evolution of the electric vehicle market means that Tesla can no longer rest on its laurels. As competitors release new models with improved features and enhanced driving ranges, Tesla is forced to continually innovate and update its product lineup. While the company's pioneering work in battery technology, autonomous driving, and energy storage has historically set apart, these advantages are increasingly being eroded by the relentless pace of technological progress worldwide. Moreover, the influx of competitors has contributed to a fragmentation of the market. Where Tesla once enjoyed a near-monopolistic position, it now faces pressure on all sides, from established car makers to nimble startups eager to capture a share of the growing EV pie. This heightened competition not only impacts Tesla's market share, but also puts additional pressure on pricing strategies, profit margins, and production capacities. Global economic headwinds, inflation, interest rates, and trade barriers. Tesla's challenges extend beyond the company's internal dynamics and competitive pressures. The broader global economic environment is also contributing to the volatility experienced by Tesla's stock. In recent years, the world has witnessed persistent inflationary pressures that have affected consumer spending patterns and increased production costs across industries. For Tesla, this means higher costs for raw materials, logistics, and manufacturing, a combination that can squeeze profit margins, especially when paired with aggressive pricing strategies. Rising interest rates further complicate the picture. As central banks around the world tighten monetary policy to combat inflation, borrowing costs increase, reducing consumer purchasing power and potentially dampening demand for high-ticket items, such as electric vehicles. Investors, too, may shift their focus from growth stocks like Tesla to more stable, income-generating assets, further contributing to downward pressure on the stock. Additionally, trade policies and geopolitical uncertainties add another layer of complexity. With tariffs and trade barriers potentially affecting global supply chains, Tesla could face disruptions in the sourcing of critical components. This risk is magnified by the company's global production footprint, which relies on a complex network of suppliers across multiple continents. Any further escalation in international trade tensions, such as renewed U.S. tariffs or protectionist measures in key markets, could have an adverse impact on Tesla's production costs and overall competitiveness. Looking ahead, balancing risks and opportunities. As Tesla grapples with a steep plunge in its stock price and a challenging market environment, investors must weigh the risks against the potential opportunities that the company still represents. On one hand, the dramatic correction has exposed vulnerabilities, ranging from intense competitive pressures and global economic headwinds to concerns over leadership focus and profit margin compression. On the other hand, the long-term prospects of the EV market remain promising, with continued global demand for sustainable transportation and technological innovation serving as powerful growth drivers. In the coming quarters, Tesla's performance will likely be influenced by several key factors. First, the company's ability to manage production costs and maintain competitive profit margins amid aggressive pricing strategies will be crucial. Second, its capacity to innovate through advances in battery technology, autonomous driving capabilities, and vehicle design will determine whether it can retain its competitive edge. Third, the broader macroeconomic environment, including interest rate trends, inflation pressures, and geopolitical developments, will continue to affect investor sentiment and consumer demand. Moreover, as Tesla's competitors continue to innovate and capture market share, the company must remain agile and responsive to changing market conditions. While the current decline in share price may serve as a wake-up call, it also offers an opportunity for the company to reassess its strategies and double down on areas that can drive long-term value creation. Tesla's recent steep plunge, marked by a 36% quarterly drop and a total decline of 45% from its peak, has forced both investors and industry analysts to confront uncomfortable questions about the company's future. The decline is not solely attributable to a single factor. Rather, it reflects a confluence of internal challenges, external economic pressures, competitive dynamics, and the complexities inherent in Elon Musk's leadership style. While some view the downturn as a temporary correction that will eventually give way to renewed growth, others worry that it signals deeper structural issues that could permanently alter Tesla's position in the market. In a world where investor sentiment is fickle and market conditions are increasingly volatile, the true test for Tesla will be its ability to balance the immediate need for operational discipline with the long-term drive for innovation. As Tesla moves forward, the company's ability to navigate these challenges will be critical, not only for its own survival, but also for the broader electric vehicle industry that it helped pioneer. With global demand for sustainable transportation on the rise and the promise of a future powered by clean energy, Tesla still occupies a central role in shaping the future of mobility. However, the road ahead is fraught with uncertainty, and every decision made by Tesla's management, particularly by Elon Musk, will be scrutinized by investors eager for signs of a turnaround. In the end, whether Tesla's current decline is a precursor to a dramatic rebound or the beginning of a longer-term trend remains to be seen. What is clear, however, is that the company is at a crossroads. Its next moves will not only determine its own destiny, but also influence the trajectory of the entire electric vehicle market. Investors, analysts, and industry watchers must now decide whether to see Tesla's slump as a temporary setback, by the dip opportunity, or as a harbinger of more challenging times ahead.